Welcome to Finance Frontier, your ultimate guide to the world of finance. Broadcasting from the heart of Chicago, a city renowned for its towering skyline and rich financial history, we dive into the latest trends and developments shaping the future of finance. This episode is titled Finance Frontier, Revolutionizing Finance from Chicago's historic financial hub.
Today, we're not just talking about any city, we're talking about Chicago, home to the iconic Chicago Board of Trade. This historic financial landmark has been a cornerstone of American finance since 1848, symbolizing innovation and resilience. It's a fitting backdrop as we explore how modern financial strategies are revolutionizing the industry.
The Chicago Board of Trade, with its magnificent Art Deco architecture, isn't just a building. It's a testament to the evolution of financial markets. From trading grains in the 19th century to the complex financial instruments of today, it's seen it all. And now, as new financial technologies emerge, we stand at the brink of another transformative era.
In today's episode, we have a jam-packed agenda that you won't want to miss. We'll start with the latest finance news, covering everything from the recent downturn in semiconductor stocks to groundbreaking advancements in investment strategies. We'll also dive into the rotation from megacap to small-cap stocks, highlighting why this shift is crucial for savvy investors.
We'll delve into major developments like Goldman Sachs' challenge to the Federal Reserve's capital requirements and the significant financial stress signals from U.S. banks. Plus, we'll explore innovative investment strategies and tools that are changing the game for both retail and institutional investors.
For those looking to make informed investment decisions, our trading and investment segment will provide actionable insights on promising stocks like DeFi Technologies Incorporated. We'll analyze market trends, share our top picks, and offer expert advice to help you stay ahead of the curve.
We'll also continue our finance series with an in-depth look at infrastructure investments and their role in environmental sustainability. These topics are not only timely, but also vital for understanding the future landscape of finance and technology.
Finally, our business ideas segment will inspire you to think big with a concept for a fintech startup focusing on personalized investment portfolios. We'll outline the steps to launch and scale this innovative business, highlighting its potential for significant financial returns.
We've got all this and much more coming up. To ensure you never miss an episode, subscribe to Finance Frontier AI on Apple Podcasts or Spotify, and follow us for live updates on Twitter. Your subscription helps us climb the charts and reach more listeners, expanding our community of finance enthusiasts. Chapter 1, Top Finance News. Federal Reserve's potential rate cut.
The Federal Reserve has indicated that they might cut interest rates by the end of 2024. This decision could have significant implications for various sectors, especially housing and financial services. A rate cut generally lowers the cost of borrowing for consumers and businesses, leading to increased spending and investment. However, it also comes with the risk of inflation if the economy grows too quickly. For Chicago, a city with a robust financial sector, such a decision could stimulate economic activities, but the financial institutions need to balance the potential for increased lending with the risk of higher inflation.
U.S. trade tensions and market volatility.
Shares of major chipmakers like Nvidia, ASML, and TSMC tumbled recently, pulling the stock market down to its worst day in months. This decline was triggered by U.S. trade tensions with China and comments made by former President Trump about Taiwan. Taiwan is home to TSMC, the largest contract chipmaker in the world. These geopolitical tensions have created significant market volatility, impacting sectors like finance and technology, which rely heavily on semiconductor components. The ripple effects are felt in financial hubs like Chicago, where many tech-driven financial firms are adjusting their strategies to navigate these uncertain waters.
CrowdStrike Global Outage.
CrowdStrike experienced a major global outage following a routine update that went wrong. The issue stemmed from skip checks during the update process, highlighting the importance of rigorous update protocols. This incident underscores the potential risks associated with automated systems and emphasizes the need for robust cybersecurity measures. For businesses and tech hubs like Chicago, ensuring comprehensive cybersecurity protocols can mitigate such risks and protect against significant operational disruptions.
Morgan Stanley's projection on gold prices.
Morgan Stanley projects that gold prices could rise above $2,600 by Q4 due to ongoing economic uncertainties and a strong dollar. This surge in gold prices indicates a growing trend among investors seeking safe haven assets amidst financial volatility. For financial sectors in cities like Chicago, this could influence investment strategies and portfolio diversification. Advisors may suggest increasing allocations to gold to hedge against market instability.
Starbucks surge due to Elliott Management's stake.
Starbucks shares surged following news that Elliott Management took a sizable stake in the company. Activist investors like Elliott Management often push for changes that they believe will increase shareholder value, such as cost-cutting measures, strategic acquisitions, or changes in management. This development underscores the importance of monitoring activist investments and their impact on major corporations. For investors in Chicago, this is a reminder to stay informed about potential shifts in large company strategies driven by activist shareholders.
China's economic outlook post-policy meeting.
Following a key policy meeting, foreign firms remain uncertain about China's economic policies. China's economic outlook has significant implications for global trade and investment strategies. For firms based in financial hubs like Chicago with substantial exposure to Chinese markets, this uncertainty could lead to increased volatility and risk. Businesses might delay investments or expansion plans until there's more clarity, and they may look for alternative markets to mitigate risks associated with their exposure to China.
Mortgage rates hitting a 4-month low.
Mortgage rates in the U.S. have hit a 4-month low, prompting increased homebuyer activity. Falling mortgage rates can drive up demand and influence local real estate investment strategies. However, increased demand could also drive up home prices, making housing less affordable for some buyers. For investors and real estate professionals in Chicago, understanding these trends can help them make informed decisions about where to allocate their resources.
Chapter 2. Major developments. Trends in oil prices.
Oil prices have slipped due to a strong dollar and concerns about China's economic outlook. Fluctuations in oil prices can significantly impact various sectors, including transportation, manufacturing, and energy. For cities like Chicago with diverse industrial bases, changes in oil prices can affect operating costs and profit margins for many businesses. Companies involved in logistics and transportation might need to adjust their pricing strategies or explore more sustainable energy options to mitigate the impact of volatile oil prices.
Goldman Sachs challenge to the Federal Reserve's capital requirements.
Goldman Sachs is challenging the Federal Reserve's requirement to hold additional capital following the latest stress test results. This move reflects ongoing debates over how much capital banks should hold to ensure financial stability without stifling their ability to lend and invest. The outcome of this challenge could have significant implications for the banking sector. For financial institutions in Chicago, this issue is particularly relevant as they navigate the regulatory landscape and strive to maintain profitability while ensuring financial stability.
New regulations on digital currencies.
The U.S. government is considering new regulations on digital currencies to address concerns about fraud, money laundering, and market stability. These regulations could have a significant impact on the growing digital currency market and how financial institutions handle digital assets. In Chicago, a city with a strong fintech presence, these changes could drive innovation and adaptation in the financial industry.
Chapter 3. Trading, Investment, and Making Money. DeFi Technologies Incorporated is at the forefront of the decentralized finance revolution, providing innovative financial services and products centered around digital assets. One of their key partnerships is with CoinMarketCap, which enhances their market visibility and credibility.
They also launched the Valor Hedera (HBAR) ETP on the Bourse Frankfurt exchange, which allows investors to gain exposure to Hedera Hashgraph through an exchange-traded product. This is a significant milestone for the company.
Another innovative product from DeFi Technologies is the Yield-Bearing Bitcoin (BTC ETP), offering a 5.65% yield to German investors. This product not only provides exposure to Bitcoin but also generates income, making it attractive to a broad range of investors.
Financially, DeFi Technologies is showing impressive growth. Their revenue projections increased from $7.81 million in 2023 to $62.17 million in 2024, and further to $132.76 million in 2025. This growth is driven by new product launches, geographical expansion, and increasing inflows into their ETPs.
Additionally, the company is expected to shift from negative earnings to a positive EPS of 21 cents in 2024 and 30 cents in 2025, indicating strong profitability potential.
Analysts have set a one-year price target of $2.05 for DEFTF. However, given the projected growth, this target might even be conservative, suggesting potential for a higher valuation.
Now, let's talk about the recent market trends showing a notable rotation from overvalued megacap stocks to undervalued small-cap stocks. This is significant because it reflects investors' search for growth opportunities and value in smaller, potentially more agile companies.
As megacap tech stocks face valuation pressures, investors are increasingly turning to small-cap stocks that offer greater growth potential and are perceived as better positioned to benefit from potential Federal Reserve rate cuts.
Historically, small-cap stocks have outperformed during periods of economic recovery and market rotation. Tom Lee from Fundstrat highlights that small caps are poised for substantial gains, potentially outpacing the S&P 500 by at least 50% in 2024.
Small caps are expected to see faster revenue growth and higher earnings growth compared to large caps. Additionally, their lower P/E ratios make them more attractive to value-oriented investors.
DeFi Technologies' new business line, DeFi Alpha, focuses on generating yield from low-risk arbitrage trading in the digital asset space. This initiative has already generated approximately $40 million in 2024, showcasing the company's ability to leverage its excess liquidity effectively.
Their geographical expansion is also notable. Valor Incorporated, a subsidiary of DeFi Technologies, continues to expand its presence by launching new ETP products and entering new markets, including the Nordics and the Middle East.
Moreover, Valor reported a significant increase in assets under management, AUM, reaching $748 million Canadian dollars, up 47.2% this fiscal year, bolstered by strong net inflows. This growth in AUM is crucial for sustaining long-term revenue and profitability.
For investors, the potential upside for small-cap stocks like DEFTF is significant. Analysts' conservative price targets suggest there is room for higher valuations. However, it's important to consider market volatility and execution risks.
Strategies to mitigate risks while investing in small caps include diversifying your portfolio and keeping an eye on market trends and company fundamentals.
DeFi Technologies Incorporated presents a compelling opportunity for both long-term investors and short-term traders. Its innovative products, strategic partnerships, and substantial growth projections make it a stock to watch. For traders, the current setup offers an excellent risk-reward ratio, while long-term investors can look forward to significant potential returns.
To get detailed trade setups and live updates about stocks like DEFTF, follow us on Twitter. We often find small cap and penny stocks with at least 50% upside that banks and financial institutions do not cover. Stay ahead of the curve and make informed investment decisions.
Thank you for tuning in to Finance Frontier AI. Follow us on Twitter for more updates and insights. Remember to do your own research before making any investment decisions. Happy investing!
Chapter 4. Finance Series, Infrastructure Investments. Types of infrastructure investments.
Infrastructure investments refer to investments in physical assets and facilities essential for the functioning of a society. This includes transportation systems, utilities, communication networks, and social infrastructure like schools and hospitals. In a city like Chicago, infrastructure projects can range from upgrading public transportation systems to developing smart city technologies that enhance urban living.
Benefits of infrastructure investments.
Infrastructure investments offer stability and long-term returns. They are often less volatile than other types of investments because they are backed by tangible assets and long-term contracts. Additionally, they benefit from steady demand, as these services are essential regardless of economic conditions. For institutional investors in Chicago, infrastructure investments provide an opportunity to diversify portfolios and achieve consistent returns over time.
Green infrastructure and recent developments.
Green infrastructure investments focus on sustainable projects, such as renewable energy facilities and energy-efficient buildings. The Biden administration's infrastructure bill aims to invest over $1 trillion in U.S. infrastructure, creating numerous investment opportunities in modernizing transportation systems, expanding broadband access, and upgrading water and energy infrastructure. For investors in Chicago, these developments present opportunities to invest in projects that not only promise financial returns, but also contribute to environmental sustainability. That concludes our discussion on the top finance news and market developments. Now, let's dive into an exciting business idea related to today's topics. Our focus is on a fintech startup for personalized investment portfolios.
Let's dive into the steps needed to launch this AI-driven fintech startup and why this is such a promising idea. First, the rationale behind this concept is clear. Personalized financial advice is in high demand, and traditional methods are often insufficient to address individual needs effectively. By leveraging AI, we can create innovative solutions that are more accurate, efficient, and scalable.
The potential for AI in personal finance applications is enormous. For example, AI can help analyze a user's financial behavior in real time, predict market trends with greater accuracy, and optimize investment strategies. These applications not only help protect the user's investments, but also enhance their financial growth.
Now let's discuss how to develop these AI tools. Begin by identifying specific financial challenges that AI can address effectively. Invest in research and development to create AI models that can analyze vast amounts of financial data. These models should be designed to provide actionable insights and predictions tailored to individual investors.
Once you have your AI tools, forming partnerships is the next critical step. Collaborate with financial institutions, data providers, and tech companies. These partnerships can provide the support, data, and resources needed to scale your solutions. Moreover, aligning with these organizations can help in gaining credibility and trust.
Securing funding is also essential. Look for venture capital and fintech-specific grants that support innovative financial solutions. Venture capital can provide the capital needed for early-stage development, while grants can support projects with significant public benefit. Highlighting the potential financial impact and profitability of your solutions can attract investors.
Implementing effective marketing and outreach strategies is crucial to ensure your target audience is aware of your solutions. Utilize digital marketing, social media, and public relations to create awareness and drive adoption. Demonstrating the real-world impact of your solutions can help in gaining traction.
Building a strong multidisciplinary team is also key. Your team should include experts in AI, finance, business development, and marketing. A diverse team can bring different perspectives and skills to the table, which is crucial for addressing complex financial challenges and driving innovation.
Staying updated with the latest research and trends in both AI and finance is important. Continuous learning and adaptation will help your startup stay ahead of the curve and innovate effectively. Regularly attending industry conferences and workshops can also help in networking and staying informed about the latest developments.
Now let's talk about how you can make money with this startup. One revenue stream could be subscription fees for premium financial advice services. Users could pay for access to advanced analytics and personalized investment strategies.
Another revenue stream could be commission on trades executed through the platform. As users buy and sell stocks and other financial instruments based on the platform's recommendations, a small commission could be charged for each transaction.
Additionally, you could offer consulting services to help individuals and businesses implement AI-driven financial solutions. This can include everything from initial assessment and planning to the deployment and management of AI systems.
By offering a combination of products, services, and data, your startup can create multiple revenue streams. This diversified approach not only maximizes financial returns, but also ensures a stable and sustainable business model.
By following these steps, aspiring entrepreneurs can create a business that not only offers significant financial returns, but also makes a meaningful contribution to personal finance management. The combination of AI and personalized financial solutions holds great potential for creating a positive impact.
If you're inspired by this idea, think about how you could apply these steps to your own projects. Share your thoughts and ideas with us on social media, and let's continue this conversation. Don't forget to subscribe to our podcast and follow us on Twitter for more insights and updates.
Stay connected.
We encourage all our listeners to stay connected with us for the latest updates and insights in the world of finance. Subscribe to Finance Frontier AI on Apple Podcasts or Spotify, and follow us on Twitter for live updates and more interactive content. Your subscription helps us climb the charts and reach more listeners, expanding our community of finance enthusiasts.
Listener questions.
We love hearing from our listeners. If you have any questions about today's topics or any other finance-related inquiries, feel free to reach out to us. Here are a couple of listener questions we received recently.
Our first question comes from John in New York City. He asks, with the recent market rotation, how can individual investors take advantage of the shift from mega-cap to small-cap stocks?
Great question, John. Individual investors can start by researching small-cap stocks with strong growth potential and lower P/E ratios. Platforms like financial news sites and investment apps can provide valuable insights. It's also beneficial to follow us on Twitter for live updates about new trades and investment opportunities. We often find small-cap stocks with at least 50% upside potential and take swing trades in ETFs when we see a good setup. Additionally, our episode Navigating New Frontiers, AI Innovations, Investment Trends, and Global Market Dynamics covers strategies for leveraging market shifts.
Our second question is from Emily in San Francisco. She asks, what strategies can be employed to mitigate risks in volatile markets?
To mitigate risks in volatile markets, investors should focus on a well-diversified portfolio, maintain a long-term perspective, and avoid making impulsive decisions based on short-term market movements. Regularly reviewing and adjusting your investment strategy can also help manage risk effectively. For more detailed strategies, you can refer to our recent episodes and follow us on Twitter for live updates.
We've got all this and much more coming up. To ensure you never miss an episode, subscribe to Finance Frontier AI on Apple Podcasts or Spotify, and follow us for live updates on Twitter. Your subscription helps us climb the charts and reach more listeners, expanding our community of finance enthusiasts.
Disclaimer and acknowledgements.
The content discussed in this podcast is for informational purposes only and should not be considered financial advice. We recommend consulting with a professional financial advisor before making any investment decisions. We'd also like to acknowledge the sources that contributed to today's episode, including Yahoo Finance, for providing valuable information and insights.
Copyright 2024 FinanceFrontier.com. All rights reserved.